Welcome to FOMO Consulting for your daily AMC stock analysis video on Friday, May 7th. Ladies and gentlemen, they don't stand a chance. They are fighting a battle they cannot win. And as always, the apes are winning, the diamond hands are winning, and the retail investor is winning. If you find this video informative and entertaining, please like, share, and subscribe. It is a newer channel, and I would certainly appreciate the support. Let's get into the video. I want to thank everyone who has liked, shared, commented, and subscribed. Again, I cannot thank you enough from the bottom of my heart. Start with a quote. Rock and roll, baby. It's hard to see your destination when you're only focused on the cracks in the sidewalk. From Gene Simmons of KISS. Very insightful. We've had a week full of cracks in our sidewalk, right? 6, 7, 8 red days, whatever it's been. A lot of FUD, a lot of anxiety, a lot of annual meetings getting moved around. We've certainly had plenty of cracks, but let's not forget our destination. So let's look at the broader market today. Overall, pretty good day. Three major indices all up. The advancers outnumbered the decliners. That's the first time in a few days. Tech had a relatively decent day to rebound. Overall, a good way to end the week, right? It's been a rough week, a lot of turbulence in the market, especially in the tech segment. So Trey would be very proud of his George W, but go figure, this actually was on the daily chart minute by minute, and go figure, it spelled win, because that's exactly what we did today, ladies and gentlemen. So let's look at the chart for the day. We closed up 51 cents or 5.67% to close at $9.51. But who cares, because the last candle of the day is all that matters, right? It's how you win the game. It's how you close the game. That last candle put us over the 950 mark, clearly putting call options in the money. Fantastic way to end the day and the week, setting us up, I believe, for a very bullish week next week. But again, fantastic day, right? So let's look at a few of the indicators here. So the moving average finally got that little bend. It looks like hopefully if we get another green day or two next week, we should be back in a bullish direction. Same for the MACD. It is a very shallow MACD right now, a little bit indecisive, but I certainly believe a couple more green days we'll be back in bullish territory. So again, I am not concerned whatsoever. Fantastic day. When in doubt, zoom out. We are certainly still looking very bullish. We are on the uptrend, no doubt about it. So I've had 24 hours or so to digest the earnings call, have a little time to think about the company. You know, one of the big things that kind of came out of that was the 43 million share, right? And that they've already sold 17 million or so at the money offering. But if you look how they've done it versus the way GME did it, if you recall on April 5th, GME basically nailed the market, issued 3.5 million shares. That absolutely tanked the stock that morning. It was down over $20. I'm sure people that are in GME thought the world was coming to an end. But go figure, the stock recovered by the end of the day. They were only down 2.4% by the end of the day. That offering was 6% of the public float at 3.5 million shares. The 17 million shares that have already been sold was only 4% of the public float of AMC. But they've incrementally sold over a period of a few days. Now, with that revelation that they've already been actively selling, would also help to us understand that why the prices, kind of been going down over the last week or so. There's been a little bit more dilution to the market, additional selling. So I don't think it's anything to be concerned about. It may go on for another week or so. Again, but I think we are clearly still in the driver's seat looking at all the indicators and the data. So one other important fact to come out of this was the fact that there was 3.2 individual shareholders as of March 11th. No doubt there are more individual shareholders now. I would certainly venture to guess it's probably closer to 3.3 to 3.5 million. We'll see what the details come out in hopefully June, if not July. The record date will be on June 2nd. We are not sure right now when that will be public information, but it's great information and yet another catalyst to look forward to. No doubt between now and then, any naked shorts will be covering. I do believe this is a very, very bullish catalyst for us going forward. And it's clearly killing the FUD because, as you know, it has been all about the 43 million. It was the 500 million shares. How much debt AMC has. This is the transcript right out of the earnings call. They have raised approximately $2.9 billion in fresh equity and debt capital over the last year. Number one, to stay afloat, but also more importantly, to begin paying off that debt, which is absolutely huge. So one last piece of information I think is absolutely key is that they deleveraged to the tune of 1.25 billion in debt that was either forgiven by our lenders or converted into instead to equity. That's a big deal to get this company back solvent, and I have no doubt that's why the earnings per share number improved substantially versus Q4. They are removing debt, right? So one last thing is the revenues to expect for the last 5 years in a row. The movie theater business box office sales have been $11 billion 5 years in a row. Keeping in mind Netflix, Amazon, Hulu, you name it, has all been out there in the competing space. Obviously, COVID forced people into a streaming service, for entertainment while you're stuck at home. But I have no doubt that the revenues will come back, specifically Q2, but more importantly, Q3 and Q4 for AMC. So we have a lot of positive momentum to look forward to. So I showed this yesterday. This is the diamond triangle. The apes hold the foundation, 80% of the stock. The shorts can't go that way. Now you've got the regulatory rule filings coming out, 801, 802, 002, you name it. They're all starting to pile up. They are starting to be approved. They cannot get out that way. Now you have a recovering AMC. You have a recovering economy. You have people wanting to go back to the theaters. You have increased capacity, increasing revenue. They cannot get that way. The shorts are trapped and they cannot escape. The only way to escape is to squeeze. It's impossible for them to escape. We have them surrounded. So one quick look at earnings from early November, just as a reminder, 7 red days leading up to earnings. Go figure, 5% green day the day after earnings in early November. That sounds similar, right? So you can clearly see the short interest indicators, everything leading up to earnings had a 5% day, and we were bullish from that point forward. We'll see what next week brings. Early March of 2021, again leading up to earnings, several red days, started beginning a bullish turnaround, and we shot up to $14.54, our more recent high. So I want to show you this, and this is my personal hypothesis, but the data clearly supports it, is every time there is a massive divergence between the price action and the short interest trend lines, the stock price chases the trend line to meet that exact same level or exceed it. So this is MVIS. You clearly see before the first pop, you see the orange and red trend lines. They got up to that level. We'll go figure the price shortly thereafter ran up to meet it almost exactly. The second more recent pop in the last 2 weeks, short interest trend lines went up. Big divergence between the price and trend. the price actually exceeded the trend lines. So again, this is my personal hypothesis, but I will show you now Tesla, a completely different stock than what we're involved with AMC. But as you can see, big divergence in December 2020. The short interest data shot up and the price chased it to the exact same level. Let's look at our big brother GME. Leading up to the mother of all squeezes in late January, you see the massive divergence between the price and the short interest trend lines. The price shot all the way up to find that level. The only reason it did not meet that level is because of the buying issues with Robinhood and other platforms, right? I have no doubt that that price would have met $700 plus. And if you look in the late March, early April, when it popped again, yet another divergence between the price and the short interest trend lines. And here's our baby. Before the baby squeeze in early January or late January, you had a divergence. When the price was at $2, you had a divergence in the short interest trend lines. You had a pop in price, obviously up to $20.36. Yet another pop when it was trading at $5. Yet another pop when there's a big divergence around the $7 to $8 range. It ran up to, go figure, $14. Look at the divergence at this point between the short interest trends on the far right, the yellow arrows, and the price action that we're being suppressed today. I have no doubt whatsoever that we will find those trend lines sometime soon, because over and over again, stock after stock, I am finding this is very much the case. Again, my personal own research and due diligence. Believe what you want, do your own due diligence. I'm just showing you the evidence that I'm looking at. We have 3 times more borrowed shares than we had before the baby squeeze. We had around 50 million. In late January, we are at 150 million, ladies and gentlemen. That short data trend line, short interest trend lines, I believe the price will find it. Let's look at the options for today. 2-to-1 options. Fridays are always weird, but we're still in very, very bullish territory. IV is very low for AMC, but overall very bullish way to end the week. So let me show you the borrowed shares from this morning and the return shares. So at 9:30, I took this right at 9:30. 252,000 shares returned this morning. They borrowed 984. Not the biggest problem in the world, right? 731,000 from a change perspective that they had on hand. And they did not appear to be using them all that much, but keep in mind they had 2 million from yesterday. They returned 350 by 4 p.m. Eastern at market close. They have borrowed 5 million at market close. They have in their possession 4.67 million borrowed shares just today. Now ask yourself what they're going to do with those shares. They're likely going to try to suppress and slam the price down next week and play their usual games. But if some of these rules and regulations get enforced, no doubt we will begin seeing some covering. That is an extraordinary amount of borrowed shares for one day for them to carry over the weekend. And I'll show you something very interesting. So again, rules and regs incrementally coming into place very systematically. This will box them in and has already began to box them in. There is no way out of this equation. So let's look at the Ortex data and the Fintel data for today. So institutional ownership went up by one more institutional owner. Shares or positions were increasing every day. We see at least 1 to 2, sometimes 3, but every day there's an increase in institutional ownership. 78.9% owned by the retail investor, apes and diamond hands. Total volume was actually up a little bit today. It was good to see, 37.4 million. Short shares available, 85,000. Go figure, because they borrowed $5 million today. Short borrow fee on Fintel, again, a more limited survey size. Their borrow fee at the time of this recording is 26.48%. That is insanely high. That's back to where we were about a week and a half ago. That is a 15% increase from yesterday alone. So let's look at the short interest versus yesterday. It's about the same. Short interest percent of free float actually went up versus yesterday a little bit. Percent free float on loan went up, give or take close to 1%. Shares on loan went up nearly 3 million. Days to cover is increasing by the day. I still believe it is between 3 and 4, depending on how you calculate it, but it is clearly going up each and every day by about 10 points. Cost to borrow is incrementally going up over the last couple of days, 12.77%, and we are at 100% utilization. So even with the 17 million shares put on the market at the money offering, we are still at 100% utilization, which means all the shares are pretty much being utilized, right? Extraordinary. So by closing at 9:51 today, we absolutely put about 8,000 contracts in the money on the call side. So you can see why that area was such a battle today. And I know I predicted at the beginning of the week 12 to 12.50. I still believe in that number soon. $11 would have been extraordinary to get to putting 25,000 contracts in the money. We just didn't have enough buying today, enough buying pressure. We certainly had a great day, but we had a big hill to climb, and with them borrowing 5 million shares, that's a tough hill to climb, ladies and gentlemen. So largest options purchases today: 1,500 puts, 1,500 calls, May 21st expiration, $12 strike price. More than likely, obviously, a multi-leg hedge. No big deal, but those are big dollars, and most of this is certainly on the call side and very bullish. But these are big hedges that are out there. So as always, I personally have skin in the game. I had a good day. I'm sure you had a good day. I am holding diamond hands until this thing pops, and I'm sure you are too. So let's end with a quote. If you pray for rain, you have to deal with the mud too. That's part of it. From Denzel Washington, one of my personal favorite actors. We're praying for rain, right? We're praying for life-changing money, financial freedom, rules and regulations changes, free and fair trade, you name it. We're praying for it, but with that rain comes the mud too, right? We got to get through all the negative media. We've got to get through all this process. We've got to wait for the rules and regulations changes and all the different ebbs and flows and the price action, and get through the heavy shorting and the short attacks. That's the mud, but I promise you the rain will be very worth it. So as always, ladies and gentlemen, I want to thank you for watching. I hope you found the video informative and entertaining. And if you did, please like, share, comment, and subscribe. I would certainly appreciate it, again, as is a newer channel. But most importantly, I hope you have a great weekend and your life is full of green candles. I will see you soon. Bye-bye.